Good morning and welcome. You're watching Market Cafe on ET Now. This is that show where Ankita Saxena and I bring you everything that's happened in global business news as well as domestic business news as well as on the domestic corporate front. All the announcements that have come in, we try and break that down, including the stocks that ought to buzz in trade today. Let's quickly take it to what global markets have been up to. And Ankita, talk to us about how you're looking at US and European markets.
Good morning to you, Harsh, and good morning to everyone. So Friday, the last day of the week, US markets rallied yesterday primarily on the back of the tech earnings that came in for Nvidia, and the stock was firing on all cylinders, and that really boosted the Nasdaq, the tech-heavy Nasdaq, and other semiconductor and chip-making stocks as well. So yesterday, the Nasdaq Composite surged 1.7%. After stronger than expected revenue guidance and earnings beat from Nvidia fueled a rally in semiconductor and artificial intelligence stocks as well as other technology names. Nvidia share jumped 24.4% in the session to finish at an all-time high. The S&P 500 ended 0.9% higher, while the Dow slipped 0.1% due to, in part, to an approximately 5.5% drop in the shares of Intel. Now, on a weekly basis, the Dow Jones and the S&P 500 are on pace for losses, down nearly 2% and about 1% respectively. The Nasdaq has a small gain of 0.3%, and I think that's primarily on the back of the fact the numbers that came in yesterday for Nvidia, and that really gave a major fillip to Nasdaq. Progress was made between congressional leaders and President Joe Biden on Thursday. A report from Reuters said that all stakeholders are needing to have to agree on just $70 billion in spending, and investors will be watching out for that, and a couple of other things that are likely to come out today. A whole host of things, a crop of new economic data that's likely to come out with specific attention on personal consumer expenditure given its association with the path of inflation. Data on personal income, consumer spending and sentiment, and durable goods is also due as of today. That's something that we will be watching out very closely. But back in the European markets, the markets ended lower as negative sentiments on the back of ongoing US debt ceiling negotiations continued to weigh down the markets. After a choppy day, the benchmark stock 600 finished around 0.2% lower. Tech stocks bucked the trend to end 1.8% higher following Nvidia's blockbuster results, which gave related stocks a big boost, even in the European markets as well. DAX and CSE were down 0.3% and FTSE was down 0.7%. So a mixed global handover coming in there, Harsh.
Absolutely mixed global handover. Let's have a look at where crude is at. And really not too much movement in crude there, Ankita. What we're seeing largely is that US stockpiles declined, so that's a positive. But what we're also seeing as of yesterday, there were concerns about an OPEC plus cut in production, but that Russia has now cooled off on that rumor. What they're suggesting is there will not be a cut, at least at an OPEC plus level. Of course, that includes the kingdom plus Russia. Now there are suggestions that probably just Russia will continue with its production, and if at all, in the worst case scenario, the Saudi Arabian belt will probably cut production, and that means that there will still be enough supply, and Russia cooling that debate down with regard to a production cut led to a bit of a fall in crude prices. In fact, oil is just below the $72 a barrel mark, and we're seeing Brent at $76 a barrel. So that's where we're at where crude is concerned. Of course, crude has an impact on inflation as well, and the personal consumption expense index will probably come out today as well, and keep an eye out on that because the Fed does keep a track of that quite closely when deciding on rate hikes. So that will also weigh down on a sentiment, at least in indices abroad, as well as the manner of spending will probably impact oil as well.
All right, then let's quickly look at the events that we need to keep a track of as of today. today. In the global cues, I spoke about the US core PCE number, personal consumer expenditure number, that will be coming out today, and of course the consumer sentiment as well. Very important for where the inflation is at and the rate hiking for the rate hiking cycle for the Fed as well. Also, we have the UK retail sales numbers that will be coming out today. Back home, we have the TCPL that will be mulling over the merger of TIPL with the company, and we have the last date for dividend for Anand Rathi, IRB Infra and M&M Forgings. And we have, of course, the earnings, the quarter 4 earnings that are going on in the Nifty. We have Grasim Industries, Sun Pharma, ONGC and M&M that will be coming out with their quarter 4 numbers. And amongst others, we have Karnataka Bank, Indigo Paints and BHEL that will be reporting their quarter 4 numbers as of today.
Right, an eye out on all of those. Let's quickly move on though. Let's move on to global news. Latest on the debt ceiling, that's in focus since the last week or so and will continue to remain in focus over the next week or so. But negotiations, which concluded yesterday morning US time, with only 7 days before the US faces an imminent threat of a default, talks to raise the debt ceiling seem to be moving in the right direction, nearing a deal. This even as key negotiators warned that the final phase of the talks will likely be the most delicate and difficult for both parties.
And all eyes on the Wall Street driver Nvidia that rallied a whopping 24% in yesterday's trade, one of the largest single-day gains in the value of the US stock. Moves followed after companies' stellar revenue forecast reflecting positively on the potential of AI. The surge more than doubled the stock's value and increased the chip designer's market capitalization by about $184 billion to nearly $939 billion, making the company twice as big as the second largest chip maker, TSMC. In the US, it trails only trillion-dollar value companies Apple, Alphabet and Microsoft. Right,
and let's move on to Europe. Germany has officially entered a recession as it reported a decline in its GDP for 2 consecutive quarters. Let's look at Europe's largest economy. It saw contraction of around 0.3% for Q1 of this year, calendar year that is. This following a 0.5% contraction in Q4 of calendar year 2022. German government spending has also decreased by around 5% on a sequential quarter-on-quarter basis. But on the brighter side of things, investment rose from January to March. Exports too have gone up by around 0.5%.
An auto giant, Ford partners with Tesla on charging initiatives for its current and future EVs. Under the agreement, current Ford owners will gain access to more than 12,000 Tesla superchargers across US and Canada starting early next year. Ford's next generation of EVs expected by mid-decade will include Tesla's charging plug, allowing owners of Ford vehicles to charge at Tesla superchargers without an adapter, making Ford amongst the first automakers to explicitly tie into the network.
Well, and UK has introduced new visa rules. Now only international students on postgraduate courses designated as research programs will be allowed to bring their family members to the UK as dependents. My colleague Kavita Thapiyal is here with more details on this change.
Right, so the United Kingdom will now only allow international students who are on postgraduate courses currently designated as research programs to bring in their family members, including children and elderly parents as their dependents. Now, what has happened is the UK government on Tuesday announced a new immigration crackdown targeted at overseas students, including Indians, and their visa right to bring dependent family members to the country while enrolled at a British institution. Now, let's get into what exactly been reported. Now, what's been reported is that the new package of measures was necessary after it emerged that around 1,36,000 visas were granted to dependents of sponsored students till December 2022. which the figure exactly is eightfold increase from 16,000, which was the number in 2019. And this crackdown was actually widely expected, as reports indicated that UK's latest net migration figures to be released later this week will show a massive rise from 504,000 between June 2021 and 2022, despite a Conservative Party-led government pledge to bring down immigration in the wake of Brexit. Now let's also look into the official data. As per official data for 2020-21, there were around 87,045 Indian first-year enrollments, which is behind China. And the China's number was 99,965, and which is exactly ahead of Nigeria, that is 32,945. So that's the new rule that has kicked in as of now.
Well, with that, it's time for us to slip into a short break. But before that, at Times Network, we are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. As we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So, let's get ready to catch all the action here on Times Network. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is my co-anchor, Harsaita. Let's move on to what's happening on the domestic front then. What looks like a good news for Go First. DGCA has advised Go First to submit a comprehensive plan in 30 days for a sustainable revival of operations for the airlines. My colleague Sumit is joining in with more details. Take it away, Sumit.
So Go First, which was facing problems from the last almost 23 days, has finally got a ray of hope here. Aviation sector regulator DGCA has given them a month's time. In a month's time, they have to come back to the regulator with a comprehensive plan detailing what about funding, what are they doing about pilots, what about the fleet, what about the lessors and the planes, what they are in position currently. So they have to come up with this complete plan, and which is to be submitted to DGCA, which will take a call again whether to give them a go-ahead or not. So here it's a important development taking place in the whole Go First saga. On 3rd of this month, Go First, because of the financial crunch, grounded all its flights, went to NCLT, where lessors now they want to repossess the planes, and now it's under moratorium. So it wants to use the moratorium time to come back to skies, and that's what it's doing now. Currently going to submit a plan to DGCA, which will give or will not give an approval to Go First in the next 30 days regarding this. Overall situation in skies is not very good when it comes to fares, because one less airline in the sky means the fares have shot up. Government also wants the airlines to come back to skies so that fares can be moderated. So this is the situation currently, but this important development means that Go First now has certain hope now, because it has shared these plans with its employees earlier. Now it is going to submit plans to DGCA, and upon getting any approval from the regulator, they can come back to skies. But it is yet to be seen what happens in the next 1 month, whether they come with their full plan or they cannot, and whether DGCA gives them a go-ahead or not.
Well, from airlines to power, thanks for that, Sumit. Government has asked states to rope in central PSUs for expediting the set target of 25 crore smart meters by 2025. ET now has learned from sources that Power Grid, PFC and REC may soon get big tenders for smart meters. Prakash Priyadarshi filed his report earlier yesterday.
See, central PSUs like Power Grid, PFC and REC may get big tender for procurement of smart meters, and these smart meters will be supplied to the states going forward. Sources are informing that the Power Ministry has given instruction to the states to rope in central PSUs for procurement of smart meters to meet installation target. We are also given to understand that instructions have been given to those states where tender was invited, but they did not receive much interest from private companies in terms of bids. Apart from that, in a case where states have invited tender, they have received multiple bids as well, but on higher rates. In that case too, Power Ministry has allowed them to approach central PSUs. However, Power Ministry has rejected the proposal of some states to adopt capex cum a hybrid mode instead of capital expenditure plus operational expenditure mode for procurement of smart meters. Power Ministry has asked them to stick to the previous guidelines. All the states have been instructed by the Power Ministry to float tender latest by 15th June to make necessary procurement. As you are aware that the government has approved a scheme to install 25 crore smart meters across the country, and that is part of the overall financial package of approx rupees 3 lakhs crore that was approved by the government for revival of power sector, and rupees 23,000 crore was separately earmarked by the government for procurement of smart meters by state discoms, and failing in which will cost them reduction in their central grant.
All right, moving on then. Power Minister R.K. Singh has said that there will be no dearth of investments for states keen on green energy initiatives. So let's listen into what he had to say.
Become a champion in green hydrogen production also. And we'll have many more states going green. And despite the fact that you put barriers saying that even the carbon tax or whatever, we shall beat all that, and we shall reach our target. Despite the fact that, as I said, our per capita emissions are one of the lowest, we shall continue to be the leader in energy transition. We shall continue to be the leader in energy transition because we believe it. We believe in it. Now, I want you to go out and make sure that the industry starts buying renewables. It is much cheaper. And I have put it in rules. So if any DISCOM or a CRC hesitates in giving you open access, just send us a letter, nothing else. And the concerned officer will get penalized.
Right. And two market makers, Sunil Singhania as well as Prashant Jain, believe that India remains the bright spot in an uncertain global context. Let's look at what their views are and why they feel positive about India's growth prospects.
We call it the 4D, in favor of India. One is democracy. I think the world has realized the importance of democracy post what happened in Russia and maybe a threat of what might happen in China. The second is demographics. I think India is going to be a young country at least for the next 20 years with a median age of like 30 years or lower. Third is obviously the huge domestic demand. And we always say that in 22, when the world was debating whether they will have a recession or they will just about have a 0% growth, in India the debate was whether we'll grow at 6% and 7%. And I think it's a great debate to have. And that was all largely because almost 80 to 83% of the Indian economy is domestic. And we have all seen how after 3-4 years post-COVID, we have started going on holidays, spending on festivals, weddings, and so on and so forth. And that is clearly visible in the strong domestic demand. And I think the fourth thing is the digital, benefit which the economy is getting. I think India has lagged in terms of physical infrastructure. We're trying to make up for that. But the digital infrastructure has been awesome. Tax collections are up 20% because compliance is higher. We have the UPIs and so many other things which have made India as an economy very efficient.
So I think based on fiscal 25, markets are trading between 16-17 times, which is reasonable. Which is not cheap, but it is not unreasonable either. I would say things are just about okay. So when I look at historical benchmarks, I look at typically a 15-year average, because that does cover 1.5-2 cycles. And if you look at 15-year averages, I think we are slightly above that. Our growth rate should improve hopefully as we go over the next few years. I think India is acquiring more and more prominence, visibility globally. It's becoming a large, fast-growing economy. Geopolitically, I think we are in a good situation. We are a good boy in the world. So I think given all of that, the size, the growth, I think a 16-17 P, to my mind, appears to be reasonable.
Financial services and banks will play a major role. I think when in Indian markets, banks and financial services are almost 35-40% of the economy as well as the markets. And so it is very natural for most investors to have a decent allocation to banks. Structurally, for the next 3-4 years, if the economy, as I said, is to grow from 3 trillion to 6-7 trillion, I think financial services will play a major role and will continue to be quite constructive on the bank. The only thing is bank on names where there is good brand name, because from a banking perspective, deposits as well as cost of deposits is the raw material. And the better you are there, the more competitive you become.
Banks are in a sweet spot. Balance sheets are very clean. Trade growth is reasonable and profitability is holding up well. So I would say these banks should continue to do well. My vote would be for the large big brands that have scale, that have good technology platforms, that have a good CASA mix. And so my vote would be for, that's an obvious one, and there could also be other smaller niche companies which can do extremely well, like some small banks are doing quite well. In fact, I used to discuss with many people that State Bank will do more than 50,000 crores profits, and they used to joke, but then they texted me back, look, you were right. So I think the bank has done extremely well, and other than one product category maybe or two, they have actually not lost a share in any of the products. So I think it's a really well managed bank.
And well, with that, it's time for us to slip into a short break. After the break, we go stock specific.
Welcome back. You're watching Market Cafe on ET now. Let's quickly take it to Vamakshi, who's standing by to tell us about all the stocks that you need to keep on your radar. Vamakshi, talk to us.
Well, yes, let's start off with Vodafone Idea. The company reported its fourth quarter numbers, and we did see the revenue marginally slip by almost 1% sequentially to 10,532 crores. Consolidated margins, however, have seen an uptick of almost around 60 basis points from 39.4% to 40%. The losses for this counter have also narrowed to almost 6,419 crores sequentially. The ARPU has been flat sequentially at 135. So all in all, it looks like an inline set of numbers for Vodafone Idea. Emami, on the other hand, a strong set coming for this counter. Revenue saw an uptick of almost 9% on a year-on-year basis. The margins have also improved by almost 250 basis points. Optically, when we look at the PAT, it does seem like a decline of almost 60%, but it is important to note that last year the net profit was higher owing to the MET credit entitlement benefit that we saw. The next stock on our radar is Mrs. Bector's Food, a strong set coming for this counter as well. Revenue did see an uptick of almost 37%. The net profit, however, has seen a significant uptick, 3 times higher as compared to last year, coming in at 24 crores. The margins have also improved on a year-on-year basis from 9% to 13%. Apart from that, Raj Industries should also be on your radar. The company has reported a 21% year-on-year uptick as far as revenues are concerned. The net profit has gone up much more significantly, almost over 50% on a year-on-year basis, while the margins have also improved by around 140 basis points. Overall, an inline set of numbers that has come in from Raj Industries, but also important to note that the company will be forming a JV with IOCL for biofuel production. And lastly, keep an eye out on Bata as well as Tata Power. Both these counters will be in focus after LIC has increased their stake in both these companies. Now for Bata, LIC has acquired a 2.35% stake, taking its total shareholding to 6.5%, while as far as Tata Power is concerned, LIC has increased its shareholding from 5.9% to 7.9%. So largely, those were all the counters that you should watch out for in trade today.
All right, then thank you for that, Vamakshi. And then we'll move on and go across to Ansh, who's standing by with all the brokerage notes that came in this morning. Ansh, tell us, what are the brokerages saying? What are the stocks that we need to keep an eye out for?
Sure, Ankita. So starting with Gujarat Gas, Morgan Stanley has maintained an overweight rating on the stock with a target price of 564. As for Morgan Stanley, company is expected to benefit from targeted price cuts for morbid consumers. Despite lower oil prices, Morgan Stanley anticipates propane prices to increase as petrochemical demand picks up. They expect margins to sustain at 6.4 per SCM, which is 28% above 5-year average. Apart from that, watch out for Phoenix Mills. CLSA maintains a buy rating on the stock but has revised the target price down from 1711 to 1703. As per CLSA report, company is seen as a strong play on discretionary consumption and is well capitalized to fund growth beyond FY27. They estimate 21% CAGR in retail rental income over the period FY23 to 27. Next stock in our radar is LIC. Goldman Sachs maintains a neutral rating on the stock and has raised the target price from 650 to 690. While there has been weakness in the individual business segment, it has been offset by the group business as per Goldman Sachs. Also, management expects non-par products to outpace rest of the segment. In addition to that, Goldman Sachs believes that a sustainable level of 10% return on embedded value can be achieved by LIC. So keep an eye on the stocks.
Right, thanks so much for that. One of the other stocks that will be in focus is Aster DM. They've confirmed that they are eyeing potential buyers and their advisors to sell stake in their GCC business. ET Now has reported this on the 20th of September 2022. Sharat, talk to us about some of these details. He's with us in the studio. Sharat, good morning.
Yes, good morning. So a lot of buzz is happening across the investment bankers, and they had come out with their quarterly numbers as well. So there's an interesting note to the accounts over there where they have stated that the investment bankers are actually working very actively with the potential buyers and their advisors. Now they're expecting to get the shortlisted bidders in, and you're expecting a strong commitment to complete the transaction soon, and the bidding which is expected to happen, the binded ones, which will be coming in by the first quarter of FY24. Now we had actually earlier reported at ET Now on September 20th last year that the interest is being seen by strategic investors to sell the GCC business of Aster DM Healthcare. Now almost 75% of the total revenue comes from this Gulf business, and also there was a potential restructuring where the investment bankers were hired last year. Now just looking at the businesses, let's just bifurcate between India and the Gulf business, and do remember that the asset value over here for the FY24 EBITDA numbers is around 466 odd crore rupees for the India business, and that is almost tripled for the GCC business. And looking at the enterprise value, it's almost more than 12,000 crore for the Indian business, while for the Gulf business it stands close to 15,000 crore mark. Now we did check the EV EBITDA multiples as well, and as per the report by SSBC, the India peer average stands at around 22 times, while for the Gulf peer average it stands at almost 10 times. So the street will be expecting the acquisition details on the EV EBITDA levels to see whether the deals have happened via premium or in discount.
All right, thank you so much for that, Sharad. Then we're completely out of time on this one. Harsh and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The markets will take the action forward.